All right, it's noon, so we're going to go ahead and get started. For everybody's schedules, we want to try to keep on track as best we can. So thank you very much for participating in our first virtual Lunch and Learn series hosted by Commerce Chenango. We're very excited to have you here with us today. Just please note we are recording today's session so that we can use it and post it later on, so feel free to share it with people. I have muted everybody's microphone, so if you can go ahead and leave that muted. Our speaker, I'll go ahead and get you unmuted when we're ready to start your portion. We are asking that all questions be submitted via the chat window. We will get to everyone's questions at the end of the presentation. So let me just do this real quick. All right. So this is our virtual Lunch and Learn series. Today is our first one, and we'll be speaking with Jeff Boyce from the Small Business Administration. We're very happy that he's here with us today, and he has his colleague Howard Garrity on the line as well. Upcoming sessions, if you haven't yet RSVP'd, we are doing this every Thursday for 5 weeks. Next week's session is going to be Public Health and Services, and we have somebody from Department of Social Services, United Way, CMH, Emergency Services from here in Chenango County will all be on that call. Upcoming ones are on your screen right now, and please register for each and every one that you'd like to attend. Each event is going to have its own unique ID. We're doing the best we can to avoid any security breaches. So each session will have its own login, and so please just make sure you email us at register@chenangony.org if there is a session that you'd like to attend. So, thank you very much to the Small Business Administration for hosting, being on today's call with us. I know there's a lot of questions out there right now about the number of different fundings that are available through EIDL, EIDL loans, EIDL grants, payroll protection, P3, PPP, whatever you want to call it. It's constantly moving and changing and evolving, and so we wanted to bring this opportunity for you to be able to have somebody from the SBA to answer your questions and talk with you through the programs. Again, please send any questions via the chat window. I'll be moderating that, and at the end of Jeff's presentation, we'll go ahead one by one. We should be able to get to everybody's question. If for some reason we don't, or you have questions afterwards, you can contact myself, you can contact Mary, and we'll get you the answers as best we can. So I'm going to go ahead and unmute Jeff here. And Jeff, thank you so much for being on the call with us today, and I will go ahead and turn this over to you.
Great, thank you. Carrie, can you hear me?
Yeah, thank you.
Okay, fantastic. Well, folks, hello. It's great to be with you. I really want to thank Carrie and her colleagues at Commerce Chenango for organizing today's session. It's really helpful for us to engage with as many groups as possible to get the word out, pardon me, about the various sources of assistance. As Carrie said, I'm Jeff Boyce. I'm the Upstate NY Branch Manager for the U.S. Small Business Administration. I'm joined today on this session, and on the line with me is Howard Garrity. Howard is our Economic Development Specialist based in the Elmira office. I'm based in Albany, he's based in Elmira. We're out of the Syracuse district, and that is how we cover about 34 counties, which is substantially all of upstate. But I want to be sure that you know Howard, know his name, because he is your closest resource for the SBA. I also want to just kind of start today by kind of setting the table, giving folks some context. I know that government can be this amorphous thing, and even more confusing is the alphabet soup of programs and resources. So just to kind of explain, so the SBA, the U.S. Small Business Administration, is in fact a federal government agency created in 1953. And our mission is to help small businesses start, grow, and be successful in the U.S. That's it in a nutshell. And we do that really through two main sources of assistance. That's financial assistance, money, and technical assistance. And so financial assistance is primarily loans, fixed asset loans like 7A and 504. Those are programs that you're probably familiar with. And also working capital loans like the EIDL loan program we'll talk about. So that's the money side of the house, but equally important is the technical assistance that we provide. And we do that through a series of resource partners. Probably the most well-known of those would be the SBDC, the Small Business Development Center Network, but also that includes SCORE, the Women's Business Centers, and Veterans Business Outreach Centers. So when you think of SBA, think about financial and technical assistance. And then so today we're going to talk about coronavirus financial assistance, and in particular the programs that were mentioned. So with that, let's jump right in. Next slide, please. So economic injury disaster loans, better known as EIDL. Government has acronyms for everything, and so we call this EIDL. This is a long-term working capital loan for businesses and others, we'll talk about that, who have been adversely impacted by some type of disaster. This is an existing program. We've had this for many years. It's traditionally used when there's a flood, a fire, a hurricane, some kind of a natural disaster that impacts a specific region, a geographic area. That's how it's usually used. Coronavirus is completely different. And so the good news here is that this was a tool in our toolbox that we could deploy immediately. And so back in the middle of March, around March 19th, I think, all of New York State, and by now I believe, all the states throughout the US have been declared disaster areas adversely impacted by the coronavirus, which means that all of those areas are eligible to have folks apply to the program. So small businesses anywhere in the state, nonprofits and others can apply for an economic injury disaster loan. And we'll talk a little bit about the eligibility on the next slide. Next slide, please. Okay, so who can apply? Again, our prime focus is and always will be small businesses, and that's generally defined as those firms having less than 500 employees. So you can still be pretty large and be considered a small business. But importantly, sole proprietors, with or without employees, independent contractors, self-employed folks, they can also apply for an economic injury disaster loan. Also important, private nonprofit organizations, primarily 501c3s are eligible to apply. There's also some other special groups you see here, veterans organizations, also small agricultural cooperatives, and small businesses engaged in aquaculture. They're also able to apply. And another important change in terms of eligibility that was just made in the past week or so is that faith-based organizations can apply for an economic injury disaster loan, regardless of whether we're focusing on their secular or their religious activities. They can apply in total to the program. That was an important change that was just made recently. Next slide. So as broad as that eligibility is, there are in fact some business types that are not eligible. The most prominent is at the top here you see, so farming. Unfortunately, agriculture, we're prohibited in the statute that authorizes this program. We're prohibited from providing assistance to businesses that are primarily engaged in farming, the growing and the production of crops. They are not eligible. And you see some other ineligible types here too. So when we talk about private nonprofit organizations, that then excludes all the different government entities. Also excluded from this are other types of nonprofit organizations that are engaged in lobbying or related activities. And I know we've received a lot of inquiries asking, our trade associations, our chambers of commerce eligible, because they are in fact private nonprofit organizations. Unfortunately, they're not. They're not eligible. Similarly, businesses that are engaged in gaming, whether it's legal or illegal, they're not eligible either. So casinos, that type of thing, are not. So there are a few types that cannot participate in the program, but the good news is substantially all other entities anywhere in the state of New York can conceivably tap this program. So let's talk about the terms. Next slide. So I mentioned this is a long-term working capital loan. So you see the terms here. Folks that apply can borrow as much as $2 million to cover their operating costs and to help them get through the disaster and really chart that longer-term plan for how they're going to recover. The loan can be spread out over as long as 30 years. So again, this can be a pretty significant both dollar amount and time frame. You see the interest rates here. So the good news is that those private nonprofits get an even lower low interest rate, so 3.75 and 2.75. Importantly, the payments are automatically deferred for 12 months. Again, recognizing folks have been impacted by a disaster, it will take them time to both use these monies and craft a plan for how they're going to reestablish their operations and become profitable again. So that's the deferment. So the way to access this program is you apply directly to us. You apply to the SBA. We make these loans using Treasury funds that are available to us. And you see the website here. You apply online. Based upon that application and the amount that you think you might want to borrow, there's an assignment to a loan officer, and that begins a conversation to really kind of fine-tune the application, likely collect additional information, and actually move you towards a closing and a disbursement. I will just mention here too that importantly, there is no collateral required for amounts borrowed up to $200,000. So that's again helpful. If it's a smaller amount of funding you need, you do not have to pledge collateral for anything up to $200,000. For amounts over that, they would seek collateral, and typically it's real estate or some kind of a fixed asset. So that's the traditional economic injury disaster loan, EIDL loan. And again, we've had that for a long time, but what's different is that now the entire state is a disaster area. Even more types of entities can apply, and the terms are a little bit more favorable in terms of deferment and collateral and that sort of thing. So that's one option, but let's talk about a related second option. Next slide. So again, in response to the coronavirus, the disaster, and again, just recently, so this was maybe 2 weeks ago, and this is pursuant to the CARES Act legislation and other things happening in Washington. SBA was able to sort of add on this enhanced feature, this EIDL emergency advance. And so this is really powerful. This is a grant, right? So folks are always looking for the most advantageous financial assistance. This is a grant. This is an immediate cash disbursement of up to $10,000 for folks that have been adversely impacted by the disaster. You access these funds through the normal traditional EIDL loan application, which was simultaneous with this option being added. The application was dramatically streamlined and simplified. So again, it's on our website, sba.gov. Unlike the old application, which frankly was pretty comprehensive, this new sort of initial, almost like a pre-application, can be done, we tell folks in a half hour. Honestly, you could probably click through it in 10 minutes. It's very, very basic. And one of the last things that you will check or you'll indicate as part of that process is that you want to take advantage of this emergency advance. It's towards the end of that initial quick application. And so that's important. That's the way you tap these funds. And you do not have to take out a larger traditional EIDL loan to get this advance. The application is the same, they're related, but you can take advantage of just this piece and get that cash disbursement without needing to request and go through the process for the larger EIDL loan. And again, these are grant funds, quick disbursement. That's the goal, is to quickly get some money to businesses so they can keep moving and remain viable. So two things here kind of together, traditional EIDL loan and the EIDL emergency advance. Now let's talk about the Paycheck Protection Program. Next slide. All right, so this is absolutely brand new. This is, again, a brand new program, a feature that comes to us through the stimulus package, the $2.2 trillion CARES Act that was just passed here and put into effect a week and a half ago. It's a brand new program. We sort of administer it or run it through our existing 7A lending process, and we'll talk about that in a minute. But the Paycheck Protection Program, in a nutshell, is designed to enable employers to keep paying their workers. I mean, that's it in essence. And so you apply, you provide some basic information, and you're given a grant you're given a loan that becomes forgivable. It becomes a grant. So while the monies flow through our 7A loan program and that process, As you see here, the loan amount is completely forgivable if you meet these two tests. One is that you use the funds in the appropriate allowable ways, and we'll talk about that. Again, it's substantially to cover payroll costs and some related expenses. And the second requirement is that you maintain or you quickly reestablish your pre-disaster workforce levels, your headcount, your FTEs. That is the essence of how this program is designed to work. And really, again, the goal is to keep people employed so that they can pay their bills and so that businesses are most able to then rapidly resume a more normal operation once we get out of this pause period, this shutdown, and we're able to come back and be successful. So let's talk about who can apply. Next slide. So again, the eligibility is really broad. It's substantially similar to the previous programs with a couple of important differences. So again, focus is always on small business. That's our name, that's our game. We help small businesses, but again, importantly, sole proprietors, self-employed individuals, independent contractors, all of those types of businesses are eligible to apply. And again, importantly, also these private nonprofit organizations, including added into this program as well, faith-based organizations, the veterans organizations, the tribal concerns. So very similar in that regard. The important thing I'll point out here is under P3, there is no ag exclusion. So here's a way we can help farmers, which is again new for us. So businesses for whom their substantial focus and revenue is crop production, is farming, is agriculture, they can apply for a P3 loan that converts and becomes a grant. Another important point to point out here, it says applicants have to be in operation since February 15 of 2020. So if you are a brand new, literally just starting up business, this isn't for you. You need some track record, and that's because we need some payroll numbers, and we'll talk about that. So again, very broad eligibility. Substantially most entities in the state of New York and across the country can and are applying for this program. So let's talk about when you can do that. Next slide. So the answer to that's right now, right? So this program was literally built in a few days and was launched just a few days ago. So the program opened last Friday, April 3rd, and that was the start date for applications from small businesses and sole proprietors. It's a little bit of a phased application. So then starting this Friday, tomorrow, independent contractors and self-employed folks can apply for the program. Applications, as I'm sure you've read in the media, are coming in fast and furious. The demand, the need for these funds is significant, and so is the volume. And then it says here, of course, that the program will only accept applications through June 30th of 2020. We can talk some more, maybe in the Q&A, about what's happening, what we expect as it relates to funds and availability. I mean, the general message to folks is apply now, don't wait, because the funds are finite. The current allocation for this program, if I didn't already say it, is $349 billion. And while that is just, an astronomical sum of money, just to put it into perspective, the latest numbers I have, which were through last night or this morning, which is only day 5 of the program, we the agency, so across the country, SBA working with its lenders, we've already processed and approved over 400,000 applications, and those equate to about $100 billion in funding. So you can see how massive the demand and the interest will be for this program. Frankly, this is the largest domestic economic recovery mechanism in the history of the United States. Nothing like this has ever been done. And as you can imagine, folks at the SBA and partners at Treasury, all of us are singularly focused on providing these resources to small businesses and other organizations. And And Howard and myself and all of our colleagues here in New York and in Washington, we're literally working 24/7 to provide information, to respond to requests, and to help as many people as efficiently as we can engage with these resources and deploy them so that they get the help that they need. Next slide. So how do you apply? It's a little bit different with P3. So rather than going to the SBA website and doing an application there, I mentioned earlier that this program is actually administered through our existing 7A lenders. These are financial institutions, so banks and credit unions that already have a relationship with the SBA. They understand our processes, they have a connection to us, and so we're using them as the force to sort of, to deploy these funds out into the community. So you have to go to your bank. The best advice I can give you is to reach out to the bank that you currently do business with if you want to tap these funds, and see if they are a 7A participating lender. The list of those lenders in New York is large and growing. So I think in most instances, you'll find the answer to that is yes. If you're not sure, or if you want to think about maybe different lenders or various choices, there is a feature on the SBA website where you can find lenders who are participating. It's a pretty nifty tool where you put in your zip code and it basically returns results on a map that show who those firms are and where they are in the community. And then importantly, this program enables us to bring additional lenders in to participate. And that is happening right now. Also on the SBA website, under the section that relates to P3, there's lots of good information for banks and credit unions about the process. And there's also a feature there that was just added this week that enables non-participating lenders to become participating. So we envision the list will continue to grow. And in the days and weeks ahead, many, many more institutions will be able to take applications for P3. Next slide. Okay, so I mentioned it's a loan, right? So it's a loan that converts to a grant if you meet the requirements. So if it's a loan, it has to have terms, and you see them here. This is a much shorter loan. This is designed to only be a loan for up to 2 years, 24 months. The interest rate, as you can see, is incredibly low, 1%, and all payments are deferred for 6 months automatically. Similarly, there's no prepayment penalties, there's no loan fees on any of these programs that I'm talking about. There's no cost to apply, and there's no obligation. Also, you see here, no collateral, no personal guarantee required, and the maximum loan amount is $10 million. Now, again, if you meet the requirements to have this forgiven, these loan terms become kind of a moot point, because you get the funds, you disperse them accordingly, you circle back with your bank, and you basically provide proof of that, and the loan amount is forgiven. But if you didn't fully meet the requirements, or if you borrowed even additional monies and some of it had to be paid back over time, these are the terms that you would be abiding by. Next slide. So I guess an important thing we should talk about here is the way the loan amount is calculated is it focuses on your average monthly payroll costs. And there are some different things that go into that, but the program basically says, okay, business person or not-for-profit organization, what are your payroll costs for an average month? And based upon that average cost, we'll multiply that by 2.5, and that will determine the loan amount that we will extend to you. And again, if you meet the requirements, that loan becomes a grant. So when thinking about this program, you want to know what goes into that calculation so that you get the biggest number, so that you get the most benefit. And so again, the prime focus is salary and wages and tips. Salaries are capped at $100,000. So if you're lucky enough to have employees that make more than that, you would only count the first $100,000 of their salary. Also important here too, it says employee benefits, which we know can be incredibly costly. That's a really important thing to provide to your employees. And so you can factor in not just their salary, but the amount of costs you incur as an employer for health insurance, for sick and vacation leave, all of that stuff factors in to the amount that you use to calculate your maximum loan amount. It does not include, for example, things like Social Security, Medicare, workers' comp, disability, unemployment insurance. I recognize those are other costs that employers incur, but that does not factor into the average monthly payroll cost. So that's important. If you are a sole proprietor, independent contractor, you look at basically your net earnings from self-employment and use that to sort of calculate your payroll cost. Similarly, for some small firms, the owner will take a draw, so you'd factor that in. There are different ways to look at this, but that's the essence of it, is to focus on those payroll costs, multiply it by 2.5, and that becomes the amount of the loan that you would request and be given through a participating 7(a) lender. There is a sample application on the SBA website. You'll see it's really pretty basic. It's literally one page, and it asks for this type of information. And then it has many, many different attestations. You basically say, here's the amount I want to borrow, and I pledge to do all these things. I'll use it in the right way. I'll provide documentation. I'll report afterwards. But that's basically it. It, again, is a very simplified, streamlined application. So if all that goes well, you want this to be forgiven. So let's talk about how that works. Next slide. So it's really a two-pronged test, right? So you're going to get this loan amount. The funds will be dispersed, hopefully, as quickly as possible, probably in a week or so. And then you're going to use them over an 8-week period to substantially make payroll. You're going to use it for those payroll, those wage and benefit costs, but you can also use it for a few other related things. So the calculation is based upon payroll costs, but the usage can also include a few other things like utilities. So businesses pay gas and electric and sewer and water and internet and telephone. So those costs can be paid, as well as rent for maybe a lease you have for space you're renting for your business, or interest on mortgages. So there's a couple other ways you can use these funds. Importantly, though, 75% or more of the monies have to go to covering those payroll costs, and only 25% of the monies can go for these other non-payroll expenses. So that's one of the two-pronged tests. You've got to spend the money sort of in that way, most of it going to pay salaries. The second requirement is headcount. So again, the goal is that you maintain or you quickly reestablish your number of employees. And so that's another important thing, is that you demonstrate that you've maintained that FTE, that headcount, or that you can reestablish it. And you see here that businesses have up until June 30th to fully come back to those full employment levels. So there is some time. So that's the essence of P3, the Paycheck Protection Program. That's how it works. That's who's eligible. That's how you get the money. That's how you then circle back with the bank after the 8 or so weeks to show that you spent it in the appropriate way. Fill out another very simple one-page form to request the forgiveness, and it becomes a grant. Next slide. All right, so with that, questions, thoughts?
Yeah, so thank you, Jeff, so much. That was a really great overview, and we have one question in the portal right now. Others can go ahead in the chat window and please submit questions, and I'll share them with Jeff. And we had a couple questions come in through email. So I'll go ahead and kick it off. One of the questions was about chamber eligibility. I know originally 501c6s were not included, but we had communication from the U.S. Chamber of Commerce, and there's a couple of chamber entities on the call right now that said that it was actually changed and chambers could apply for EIDL, but still not the P3 program. Do you have clarification on that?
Yeah, so I do not believe that's correct. I see nothing that enables them to participate in P3. And again, it's this similar criteria where it needs to be, 501c3 type organizations. There are a lot of other kind of permutations of private, not-for-profit organizations. But I don't believe that's correct. I don't believe that we can assist them through EIDL. Howard, I'm not sure if you're on the line, if you have any different information to add to that.
Howard, you just have to unmute yourself. I'm not sure which line is you. Okay.
Yeah, so I think the answer to that is no. If you want to sort of capture a short list of questions that either we don't get to or that need some follow-up verification, Howard and I are glad to do that. But again, based upon my latest knowledge, we're not able to help chambers of commerce through these programs.
Okay, afterwards I will send you the documentation I got from the U.S. Chamber and see if that's correct or not, and then I'll share it back with a few people that I know are chamber related and would want to know that. So thank you.
Yeah, but I'll say this. If we can, we're excited to do that, right?
Yep.
As we're moving forward, literally day by day, additional guidance is being offered because people are posing different scenarios and questions. And to the extent any of that increases benefits or eligibility, we're quickly on that in terms of engaging folks that should take advantage of it.
Okay, great. Another question was, what kind of documentation is required for loan forgiveness? The question is that the one person has 3 part-time educators that present programs at local schools, and the last time any of them worked was in early March. So do they need to bring them back on payroll even though schools will not be open?
Yeah, this is a great question. We should talk more about kind of how all this works. So I'll take the last part first. Yes, the intent is to bring people back on payroll if they're not now. The whole point of this is that we want to keep money flowing through the economy so that workers can pay their bills. And while it seems a little unusual to think that you're going to be paying people conceivably for not working, that is exactly the intent. So if there is some work they can do once you rehire them or they come back off furlough, certainly do that, but recognizing there are many business types that that make that impossible, where they physically could not do that and be in compliance with with the shutdown order. But even in those instances, the expectation, the understanding is that when you apply for and receive these funds, you begin then immediately after receipt of the funds, you begin dispersing them. So the clock for the 8-week spend of the money really starts as soon as the business receives the loan funds, the P3 loan monies from the bank. And so even if you've laid off people or if they haven't worked in a while, yes, you got to start paying them. So that's important, point number 1. Number 2, how do you calculate the average payroll amount? What records do you need? These are all good questions. So there's a few different ways you can calculate that average monthly payroll amount. One is just to look back over the past 12 months, right? Net out any salaries over 100K, net out the portion of those salaries over 100,000, and come up with a monthly average. That's one way. Another way is to look at the past calendar year. So look at 2019 and again, take a 12-month average. So those are 2 acceptable scenarios. But for a lot of businesses, they're seasonal in nature. And so the program also contemplates that and says that for those firms, they can look at the period February 15 to June 30 of 2019. So kind of this kind of time last year, and use that time frame to come up with some kind of a more meaningful but limited seasonal average. There's a 3rd option. A 4th option is for newer firms, not brand new startups, because we said before they would not be eligible, but for newer firms for whom there isn't this experience, this history, this long payroll record. They then could look at the period January 1 through February 29 of 2020. So really just the first couple months of this year, and use those 2 months to come up with an average. So there's different ways to do it. And then finally, the records. The good news is there's a lot of flexibility in terms of what applicants can use to support their calculations of these average monthly payroll costs. So it really kind of depends what period they're using, what systems they have, how big and complex the organization is, and frankly, what they have available. What's important is they have something and that it's clear and consistent and defensible. And that information becomes really sort of the biggest and most important kind of attachment or addendum to that very simple application I mentioned on the front end, and then equally important on the back end. When they come back to the lender 8-9 weeks after they've got the money, they need equally good and detailed records to show how they spent it, to prove that the money's 75% of it went to payroll, and to show that they substantially maintained their FTE, their headcount.
Okay, thank you. Another P3 question is, can partnerships with employees include an owner draw when you're calculating payroll costs?
Yes, I mean, that's fairly common, and that becomes another way in which the business is compensating folks that are helping to make the business work. So short answer is yes.
Great. This next question is a combination of a couple of questions we've had, is regarding the P3 applications. So many banks are not taking them because they're overrun with applications. Some of them have closed their portal down. Here specifically in Chenango County, I know of the 4 banks that are listed. 2 of them, you have to be a current customer. 1 of them had shut down their portal. I think the other one just opened up today. So where do people go if they have no place to apply? Either they don't currently bank with a bank that's offering it. Do you know of any of the banking institutions that are taking non-customers, and what is someone supposed to do if they don't bank with somebody who's an SBA lender?
Yeah, I mean, this is a great question, and it's obviously timely because this is the entree to the program. I mean, this is a, an actual, very legitimate situation that I think is, working itself out literally day by day. But again, the good news is loans are being made. I referenced before hundreds of thousands of applications submitted and processed and billions of dollars that have been approved. So banks are making these loans, which is great. So again, we're in the morning, now midday of day 5. So this is still a very young new program. And I know that for the first day or 2, which was last Friday and this Monday, some banks weren't yet accepting applications because many of them wanted to build, for example, like a web portal to accept the applications electronically, which I think is really smart. Some banks, frankly, wanted more guidance and had questions for us in the SBA in terms of how this would work. So they didn't want to rush in and do things that might not be exactly right and would require some rework. So a few of them, I think, would have took a little pause there. Both of those situations seem to be working themselves out, so that's helpful. I also hear what you said, and Howard and I and colleagues have heard that many banks, because the demand is so significant, many financial institutions are prioritizing taking applications from their existing customers first. I mean, that's a business decision, and I do understand that. That doesn't mean that they won't eventually accept applications from others. I believe they will. But I also know that there are other banks, community banks, credit unions, who frankly see this as a business opportunity to acquire new customers, and are ready and willing and able to take those applications from groups that don't currently have a business banking relationship with them. So that's good news. Another thing I'll just reiterate, I said, I think in the beginning, there is in fact a great feature that we've just added to the SBA website that allows financial institutions that aren't currently authorized by us to be 7A lenders to become authorized. There's a portal where they can basically provide information and hopefully quickly become authorized by us to be another lender. So with all of that in mind, the best advice I give folks is to shop around, is to, frankly, you're going to have to make probably several phone calls or send emails to different institutions to find one that will work with you. And, it's that old adage, if at first you don't succeed, be persistent. While, a bank may say no today, next week they may be willing to take additional applications. And you can get a list of those lenders again, from the SBA website. As I mentioned, you put in your zip code, and that will continue to be the most current place to go as the list grows. I mean, Howard and I started last week with a paper list of banks and credit unions that we knew just from, the history of the program, but that quickly is becoming outdated as other institutions are coming on board and getting authorized. So, again, this is a legitimate issue. I think there are many things happening that are helping to work it out, and it's going to require, I think, some patience and persistence on the part of applicants.
Yep. Thank you. That's wonderful to know. I'm glad that the SBA moved quickly to try to speed up that process. And for those on the call, we've been working on this too here at Commerce to try to keep that list as up to date as possible and provide resources as to where you can go. I believe that Sydney Federal Credit Union has been working really hard to get on that list, and I believe that they were just approved. So their portal should be open in the next couple of days. So if you're a customer of SFCU, I would check with them in the next day or so and see how to apply. I also know previously Vision's Federal Credit Union had not been ready to start taking applications, but I was just notified yesterday that their portal was open and they are starting to take applications as well. I also believe MBT is going to be reopening another round. I don't have exact dates on that yet, but there are some opportunities. I also believe Bank of America is starting to take non-customers for a short window. So hopefully some of that information is helpful to some of the local people on the phone who are looking for places that they can apply. Those are just a few of those opportunities. I also know that here locally, Community Bank and M&T are also working with current customers. So it's good to know SBA has done this. I think the point to be patient is something it's hard to do, especially when we're looking at income and how to keep our doors open. But I think patience, not overwhelming the call center when you're checking on your EIDL loan or your EIDL application. I think just understanding the vast number of people that are applying for this, those numbers are astronomical. So I think just a little bit of patience will go a long way. So thank you for that. We just have a couple more questions. We have 2 more minutes. So one of them is, if you have 8 weeks to use the fund after receiving them and you don't have your employees back until the middle of June, is the 75% of the loan for payroll will not be exhausted in the 8 weeks from the time of the loan? How does that work regarding forgiveness?
So that's that's a really important question. And, the person who posed it, I think, is really wise. And for everyone, it's important to understand, whenever you're applying for something, you want to know the rules, right? And you want to know so that you can comply with them throughout the process. And I think it's important for folks who are going to pursue this funding to appreciate that the expectation, the requirement is that you begin to use those monies as soon as you receive them from the bank. And a question or a comment that we've been getting from some potential applicants as well, it's going to take me time to get these people back, or maybe the natural seasonal nature of my business would suggest that I wouldn't be fully staffing up until, I don't know, pick a date, end of May or June or whatever. So can I wait? Can I apply now and get in before the money is exhausted? Can I receive the funding? And then can I take some time to be ready and then spend it over 8 weeks once I know I can get all my staff back and I can open up and go forward? And the answer, unfortunately, is no, because that's not how this is designed to work. The whole goal of this program is to give organizations money as fast as possible so they can either keep paying or restart paying their workforce immediately so that those people can pay their bills, so they don't have to go on unemployment. And so again, the adverse economic impact is avoided. And so even if that means that they could not come back to the work location and perform their normal duty, or even if that means some people have opted out and don't want to come back, then you got to hire new folks, because there's not like a one-to-one relationship between the money and the person who was employed. You're never providing lists of names of employees. It's simply headcount. And so that's the goal. Spend the money for 8 weeks after you get it and maintain or reestablish your headcount. Keep really good records. Circle back to the bank then when you've done both those things. Demonstrate that to them. Fill out another very basic one-page form that has a bunch of attestations that says I complied with all of what I was supposed to do. And based upon that, the bank will forgive your loan. And there's actually some recent guidance on that. So I'm just looking here at some information we got last night. So again, as I said, the 8-week period begins on the date the lender makes the first disbursement of the PPP loan to the borrower. And it goes on to say the lender must make the first disbursement of the loan no later than 10 calendar days from the date of loan approval. So there are some clocks built into this that make everyone involved move quickly. The borrower, the bank, and then the spending of the money. The whole intent is to make that happen as rapidly as possible.
Jeff, I'm glad you asked that. I actually had a colleague just email me and ask about that because it might, because of what's happening with working remotely and social distancing, the signatures that are required to draw the money could take more than 10 days. So what does a company do or an organization do if they're having trouble meeting that?
From what I've seen, so one of my colleagues in our office is our lender relations specialist, and she's much more in tune with sort of the details of our systems and interface with the banks and forms and things like signatory approvals. And what I'm recalling from seeing information from her is that electronic signatures are allowed for this process. So I think that's something that's contemplated. I'm just looking here and I can't put my finger on it, but that's my recollection. And I'll just say this. So, you know, there's more detail that comes out literally each day on the Paycheck Protection Program and sort of how it all works. As more and more sort of questions come up and sort of specific situations are posed, there's additional guidance either from the SBA or from our partners in this, the US Treasury. And so particularly for organizations who are trying to support members, and the best advice I can give you is look at the SBA and Treasury websites every day. What I just read to you was from an FAQ that was literally just posted yesterday on the Treasury site. So every day there's a little more information that helps all of us have greater clarity on how this will work.
Okay, great. Another question, one of our listeners want to know, how do they report that 2 of their 7 full-time employees are paid through grants, through either federal or state grants? How do they report that for the loan forgiveness portion?
Your employees are paid through grants.
2 of their 7.
Yeah, I mean, so I'm not sure that matters, right? So employees, the source of compensation for employees can come from a lot of different places, but I guess what I'm not clear on is are they temporary workers? You know, as long as they were on the payroll as an employee prior to this pause and this shutdown, I don't think the source of their compensation necessarily matters. You would consider their payroll costs as part of the calculation, and that would then be used to determine the loan amount, which becomes a grant. They would then get those funds, and the expectation would be to pay them with these funds so that they can keep working. And I guess as I say that, maybe I'm thinking, maybe the questioner is saying, is that problematic because the source of the grant only wants those employees to be compensated by their monies from the grant? That's an interesting scenario. So I think we probably have to take that offline, drill into the terms and conditions of the grant funding and see if that was the case. That might be where this is going. That's a unique one. I haven't thought about that yet.
Okay. I think she noted that the grants have specific periods when to use, and so she was wondering if, I guess is it considered double dipping to use it from a grant, but then also get PPP reimbursement?
That's a really good question, and that's often the case in what we call sponsored research. So a lot of the universities, you know, have people on payroll and they're funded through grants, and sometimes there are those specific stipulations. So I think we need to kind of drill into that, talk with folks, from that grant funding entity and see what was allowable. That's a good question. I don't have the exact answer to it today.
Okay, thank you. There has been some talk about a new mid-size business loan program. It's not exactly out yet, but it's supposed to be for nonprofits and other businesses between 500 and 10,000 employees. It's still in the works. Do you have any guidance about that program? Is it going to be through SBA the way the EIDL program has been? Do you have anything about that?
Short answer is no. I mean, I've read some of those press clips myself. There's a lot of discussion now and a lot of interest maybe in different or additional programs, or what seems most immediate is this sort of growing consensus that the federal government might allocate additional monies to the P3 program. I don't have any guidance on that. I know what same thing you folks read in the press, and if that happens, the good news is that we at the SBA now have the processes and procedures defined, and we would just be able to deploy even additional funds through these same mechanisms. So from our perspective, this would be fantastic and would maybe alleviate some of the sort of rush that is happening right now, and it would certainly enable us to help many more organizations if there were additional funding.
Great. Well, I would like to thank you so much for your time. I know you're doing a roadshow of these and trying to get the information out the best you can. If there's any questions anybody else has that they haven't been able to ask, go ahead and send them to myself or to Mary, and we'll try to get you the questions. We'll circle back with Jeff about the chamber question, and if we can get some clarification on that, a definitive yes or no, so that we can share that with you. So I would just like to thank Jeff and Howard, wherever you are on the call, for doing this with us today. Like I said, we will be sharing this presentation out. So we'll be putting it out online so you can share it with anyone in your organization. Just real quick again.
Carrie and others, I'm sorry I was disconnected earlier. I'm up here in the country and just got a bad signal, but
oh, okay.
I picked up on the rest of the call. So thank you. Thank you, Jeff. Great job.
Howard, thank you. So again, just to mention, Howard is your local and closest contact for SBA. So I think it's really important, if you had not heard his name before, to know Howard Garrity is our person in the Southern Tier, and certainly encourage you to connect with him. And Carrie, I'm sure you know Howard, right, and know how to get a hold of him.
Yes, yeah, I can certainly direct questions to you, Howard. Thank you.
All right, feel free to do that, Carrie.
Great. So just real quick, this is the first of a 5-week series. We have another virtual lunch and learn next Thursday, April 16th, with our public health and services here in Chenango County. And please register for any of the upcoming sessions that you would like. We will continue to record them and share them out. And I'd just like to thank everybody once again. Be sure to check out our website, our Move Chenango Forward page. We have a lot of resources, links to SBA, links to the USDA, Department of Labor, list of restaurants that are open and serving. Hopefully some of you got some to-go lunches today. And I know we got lunch from Park Place today, so I'm very excited about my steak salad. And also #Commerce Chenango Cares. Thank you so much for being here with us today, and we will look forward to doing this again with you next week. Thank you, everybody, for participating.
Thanks, Carrie. Bye, folks. Have a great day.